So this is why I think people should use S Corp elections even though you have an LLC. So an LLC can actually be taxed in multiple different ways. One, you can be taxed as a partnership, which is the default rule. You can be taxed as a disregarded entity if you're a single member LLC, and that simply goes to your Schedule C. Or you can elect to be taxed as an S Corp or a corporation. If you choose to go the S Corp route, which is what this video is about here, you would file Form 2553. That is the S Corp election form. And then at the end of the year, your LLC would file an 1120S information return because S corporations don't pay federal tax to the IRS, much like your LLC. So your LLC, if it were a partnership, would file a Form 1065. It would then generate a K-1 that would be reported on your Schedule C of your Form 1040 tax return. And that is the same thing that an S Corp election will generate as well. You'll get a K-1. But the reason you do that is so you can pay yourself a salary and save on self-employment tax. For example, if you're making a lot of money, you can pay yourself a nominal salary of about $100,000 a year. And at the end of the year, you will then pay out all the profits from the company as a dividend, and that would be taxed at the capital gains rate of 15 to 20%. So the corporate rate for taxes for corporations, if it were a C Corp, would be in the 20s, but you can keep that rate low as a capital gains between 15 and 20% if you dividend out the profits depending on how big the profits are. Moreover, by giving yourself a salary, you are generating a W-2 every year. And that allows you to manage what tax bracket you're in. So that's also helpful. Now remember, both K-1s from the partnership or the single member LLC and the 1120S, the S corporation, are reported on Schedule C of your Form 1040. So this is what a lot of people are tending to gravitate to as we are seeing it here as a tax attorney. If you are not making an S Corp election, you're going to be taxed on everything that comes through here, less your deductions. And I promise you the self-employment tax that you're going to have to pay on that is going to be substantially larger than the self-employment tax that you would pay if you elect to be an S corporation. That is simply a way to manage your tax base. And by managing that tax base, you pay less in taxes. So every time you pay yourself, you're going to have your taxes taken out and remitted. And at the end of the year, you can dividend out your profits and pay capital gains tax on those. Just a little bit of a tidbit of why we choose to make S Corp elections for LLCs, especially for clients that are making a good amount of money. Like and follow for more.